From an economic standpoint, Turkey has been on the verge of this type of crisis for some time. In many ways, it's surprising it didn't occur during 2013. After the Gezi crisis, there wasn't a pullback from foreign investors then, or after the 2016 coup attempt. The fact that Turkey remained resilient then led many to believe it could avoid a crisis in the future, but unfortunately, as the summer of 2018 has shown, it hasn't been able to.
How much of this then do you think is a function of an idiosyncratic story in Turkey versus a broader move in that macro investors are shying away from the so-called easy carry trades in an environment of the Fed tightening, dollar strengthening, the Fed reducing its balance sheet, and from an opportunity cost perspective, thinking, well, we might as well be deploying our capital into developed markets rather than dodgier emerging markets?
On that point, I would say that a couple of years ago, analysts like to talk about what they call the fragile five, countries such as Turkey, Indonesia, and some others. Most of the other countries proved more resilient because they had much stronger buffers, also much more flexible policy approaches. But in Turkey, conditions have become very political, and independence of institutions such as the central bank haven't been guaranteed, and that scared off a lot of investors. So I would say yes, it has been quite an idiosyncratic case with regard to Turkey.
What do you think Turkey needs to do to turn this around now?
Oh, just a couple things. They need to give the central bank independence. They need to improve relations with the United States. I would say, although relations with the U.S. have been politically quite frosty for a year or two now, that's not the main issue. That's mainly symbolic. But what they primarily need to do is institute a fiscal target, which they have promised to do, raise rates again. They signal quietly an increase in rates, but they need to formalize that. They also need a backstop program for the banks in case of further weakening.
You know, I would say that the catalyst for this actually was the Central Bank of Turkey not tightening rates when the market expected them to a couple of weeks ago, and then when the tightening did come, it was a little bit too late. So that element of reasserting its independence is clearly something that's standing out as far as investors are concerned. But perhaps they're a little bit too late to the game. Do you see that any potential for them having to resort to IMF external assistance at this point?
It is a possibility. They would like to avoid that. However, everything that the IMF would recommend, the Turkish government is aware of. This includes a further increase in rates. The effective rate right now is 19.25%. Inflation is 15.9%. It will rise further, but interest rates have been raised too late, but they have been at least raised. The IMF would recommend a tightening fiscal policy, which is on the drawing board. However, the main question is really the political will. The Ministry of Finance seems to understand this, but it's not clear that the President is willing to allow rates to go as high as necessary. So we'll find out about those factors soon, but probably not until next month.
We're also getting other flashing red signals from the very high levels of short-term debt that the financial market, the financial companies and banks have accumulated over the last few years. I wonder from a sustainability perspective whether the reserves that Turkey has as a function of that external debt is sufficient, or whether we should actually start seriously worrying about the possibility of a Turkey default in the next 12 months.
Those reserves are quite low in international comparison. However, because the central bank doesn't intervene as much as other countries, they don't need the stocks that others do. However, I think that's kind of an imperfect comparison because Malaysia and the Czech Republic also have low levels of reserves relative to debt service. But certainly in the case of Turkey, if they had, say, twice the level of reserves, investors would be a lot more confident. This might be achieved, but I think we're talking a period of 3 to 5 years.
And speaking of Turkey, actually, we're just getting some headlines out of Erdogan, the Turkish president, who's saying those who think they can make Turkey give up through exchange rates will soon see they are mistaken. Turkey has the power and ability to overcome all of this, as we were just discussing. The aim is to bring Turkey and its people to their knees. He's referring to the attack on the economy. And he says the attack on the Turkish economy is no different from an attack on the flag. So quite strong words coming out of the president there, but clearly signaling their intent to get things back in order again. So What do you think, what would you need to see for the investor community to then start feeling a little bit more confident and see a stabilization in the currency and of course in the credit markets there as well? What is the first thing you would need to see in the next couple of days?
We are seeing the right types of moves. The presentation from the finance minister last Thursday said, as we like to say, all the right things. Interest rates have been raised quietly. We've had a couple ratings downgrades, and that's really cleared the deck. On the point of an economic attack, I would see it just as reverse. I would say not that it's being attacked, but it's being abandoned. But I think the one thing that we need to see is the president giving carte blanche to the other economic agencies to do what's necessary in order to stabilize the economy, to step away from accusing others, but rather say Turkey has the power to overcome this itself. It does, but what it needs to do is to implement those policies as opposed to continuing with the rhetoric.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.